Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Today is my 81st birthday and closing in on the end of my 60th year in the investment business. I'm not sure that all those years ago I could have foreseen that I would still be practicing the art and the science of investment analysis at this age. But I do have to observe that now I know why people stay on forever. Every day brings something new and often unexpected that impacts our business, and it keeps your mind young and running hard just to keep up. Thanks to those who knew and have sent me their best wishes. Before we turn to the FANGs, a quick note. I was on BNN yesterday talking about the banks, the Canadian banks, which are in the middle of their earnings season. If you want to catch that segment, click the link in the description. Now, turning to the FANGs. Just because things are new and interesting does not always mean that if we work and study hard enough that everything will be crystal clear. When I go through the FANGs today, I have to observe that things are very murky, unsettled, and even a bit baffling. We are getting a lot of mixed messages right now, as we shall see in a moment. Yet somehow we need to develop enough clarity to reach decisions on each of these 8 stocks. But first, a reminder. If you enjoy FANG Friday, but consider yourself to be more generally a value investor, like myself, then stay with me till the end of the video to hear details about my free value investing webinar, actually almost a hyper value investing seminar that will be taking place in the new year. I will be covering an aspect of the stock market that very few people know much about, but which can produce spectacular gains. Spaces are limited, and you won't want to miss out, so make sure that you watch to the end of today. We have already had a lot of sign-ups, so if you're interested and haven't signed up yourself, stick around to the end, where I will explain the sign-up procedure. Okay, right now we need to take a close look at the FANGs and what's been going on. But as always before I do, I like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel and we appreciate it greatly. Okay, let's start off with Amazon, and here I've got a very close-in view of the stock, and you can see it's just holding on to its bubble price almost by the skin of its teeth. Nothing decisive whatsoever. No signals one way or the other here. Meta, which appeared to be breaking out over its mid-super growth price, that's 5.5 times book value, has abruptly reversed course again. And therefore, as I was waiting for a confirmed buy signal, we haven't got it as of yet, so be careful here. Alphabet has pulled right back to its own MSG price, so we will be watching carefully. Now, it has broken down very briefly a couple of times just below the MSG price, so we won't worry too much about that. But anything more definitive than that, we may have to reverse our buy signal on this stock. Apple continues to hold in here, having a nice run. You will keep in mind, won't you, that with the stock buybacks, that it is likely that the real HB6, which is 33 times book value, is something like this, probably almost to the top of its HB5. And that means that the HB7 price, which is 44 times book value, therefore is much lower than that. Anyway, it continues to kind of thread the needle, and it's been moving strongly. So we'll stay with the stock for the time being. What's the principal problem? The principal problem is look at the trend of the fair market value. It's been going nowhere for the past almost 2 years. That is a long-term concern of mine. Microsoft, here is the almost, you might say, the champion AI stock. NVIDIA, of course, which actually makes things for AI, but here is what we might almost call kind of the leader of the AI. It's been moving up nicely. However, we do have to observe that the stock has hit its HB2 price. That's 12 times book value, 3 times before, and has not made it through. So we will be watching very carefully when that happens. Netflix has got virtually a new lease on life thanks to its last quarter, and it's going to be interesting to see whether they can carry on that momentum. The stock just leapt through its bubble price at 7.4 times book value, and has been moving up steadily ever since. We'll have to say that the HB1, which is 9.5 times book, would be our immediate target, and we'll see what happens there. Tesla, well, I think you know my feelings on Tesla. You know, when I look at the trend of its earnings forecast and fair market value, it's very hard to see why there is all the excitement about this stock. For the time being, it's been kind of trading a little bit either side of its HB2, which is, again, 12 times book value, and we'll see if it can hold here. Finally, NVIDIA it kind of looked for the moment as if the stock had broken out over its HB6, which is 33 times book value, but that was because we had a new balance sheet was actually pulled down the structural prices of the company. And as soon as the company discovered that it was on the wrong side of its HB6, which, by the way, had been nearly a 24-year high for the stock, save one period of breakout, it immediately pulled back below the line. So we shall be watching to see what happens there. In the meantime, of course, the intrinsic value keeps rising very, very rapidly with those earnings forecasts. So as I say, we will be watching this stock very carefully to see if it can break out once again to that new high over its long-term peak. Now, to summarize briefly, do you remember what I said a week ago? Both Amazon and Meta look to be breaking out and therefore giving us a buy signal. But I said there is probably no rush to take any action, as we often get a breakout pullback kind of pattern. Well, Amazon is hanging in above its bubble price, that's 7.4 times book, barely, as you saw. But Meta has failed to hold its MSG price, that's 5.5 times book, and has therefore not confirmed its own potential breakout. Adding to the uncertainty right now, Alphabet has pulled right back down to its own MSG price, where it should be where, in my opinion, it should be soldiering higher with the market. Microsoft, Apple, and Netflix all appear to be in pleasant uptrends, although Microsoft is now high enough and close enough to the next breakpoint that closer attention is warranted. Can it go through its HB2 price? That's 12 times book. Or is it at the point where it will soon be running into stout resistance and reversing course as it has 3 times before? Netflix, it's in a world of its own. Not one of the Magnificent Seven, but still a FANG. Its very recent numbers have given it a new lease on life above its bubble price. Just keep an eye on it when it gets to its HB1 price. I should watch Tesla carefully. Market sentiment may be with you right now if you own it, but its fundamentals are definitely not. Be aware of the risks in this particular stock and watch carefully. When a stock is indecisively trading, such stocks can go in different ways. I personally have to admit to extreme uncertainty here, and I think that investors are gambling in this stock. NVIDIA is the only immediate question mark because, as it turns out, with the new balance sheet in, it has not successfully challenged its HB6, that's 33 times book, which you'll recall was the 24-year extreme high before it had a short walk on the wild side, which took the shares 1 breakpoint higher. I'm not saying that it can't do it again, but until it does, I cannot issue a buy signal for the stock. Now, the FANGs are at one end of the valuation spectrum, but they're expensive by any measure, almost hyper excessively valued. But what about the other end of the spectrum? Very cheap stocks do not get there by accident and require special attention. Our proprietary charting system can help you find stocks that are cheap, may have huge upside potential, but just like the FANGs, they require careful handling. We call these blue zone stocks, not to be confused with blue chip stocks, which they may not be. And while we are not a stock picking service, we have pointed out blue zone stocks to our clients in the past, and some of these have exploded in price under the right circumstances. I would like to take some of your time and show you how to use our SVA charts to find stocks that have this type of massive potential, while alerting you to their risks as well, which can be equally large. On Friday, January the 5th of 2024, rather than having FANG Friday, I will be holding a free webinar for anyone interested in learning how to find and handle cheap stocks with tremendous upside. I have used this method my entire career, and it has worked handsomely for me. If you want to learn more, you can sign up by sending us an email with your full name to info@strategicanalysis.ca. Spaces are limited, so sign up today. If you have already signed up, you should have received a confirmation email, so check your inbox. Now, if you don't wish to wait, we want to access our database of our charts along with the suite of tools used to navigate the entire client website. Go to www.strategicanalysis.ca/pricing and sign up for a 3-month trial at a reduced rate. If you sign up before the webinar, we will make your first month free so that you can get an understanding of the charts before the webinar. I really think you'll like it. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.